Welcome, everybody. I'm Suzanne Goldberg, Executive Vice President for University Life at Columbia University. We're so pleased to have you here at this University Life Forum on COVID-19 and economic recovery. Today's forum is part of University Life's ongoing series of conversations about pressing issues of our time. And certainly economic recovery and questions about economic recovery are among the most pressing we have, both in the United States and around the world. I want especially to welcome the Columbia students, faculty, and staff who are watching both in New York and around the world, and everyone else who is joining us on the live stream and for the replay. We are going to cover a lot of ground in an hour today, so I will keep this introduction brief. I do want, though, to recognize the really extraordinary efforts of students, faculty, and staff around the university in this challenging time, and to remind you that University Life's website and the university's COVID-19 website contain updated and timely information for you. A quick word on technical issues. If you're watching on Zoom, you can use the Q&A feature to pose questions. If you get bumped off of Zoom, you can join the live stream at University Life's website, which is universitylife.columbia.edu. If you have questions that are not about economic recovery or suggestions about other forums we might host, please send them to us by email at universitylife@columbia.edu. And if we have technical difficulties during the session and freeze for too long or bump off, we will do our best to rejoin by Zoom and keep going. With that, I'll introduce our speakers very briefly and offer some context, and then we'll jump into our conversation. I do want to encourage you to look up each speaker after this conversation to learn much more about all of the work that each of them is doing on COVID-19 and on many, many more issues. So we have with us today three wonderful speakers. Glenn Hubbard is Dean Emeritus of Columbia Business School, where he is also the Russell L. Carson Professor of Finance and Economics and a professor at the University, Professor of Economics in the Arts and Sciences at Columbia. He is co-author of A Business Fiscal Response to a COVID-19 Recession. Dean Hubbard previously served as Deputy Assistant Secretary at the U.S. Department of Treasury in the early 1990s and as Chairman of the Council of Economic Advisors under George W. Bush from 2001 to 2003. Katharina Pistor is the Edwin B. Parker Professor of Comparative Law and Director of the Center for Global Legal Transformation at Columbia Law School. She is the editor of Law in the Time of COVID-19, to which many Columbia Law faculty, including me, have contributed many chapters. She is also the author of the acclaimed new book, The Code of Capital. Rajiv Sethi is Professor of Economics at Barnard College and external professor at the Santa Fe Institute. He is co-author of the influential Roadmap to Pandemic Resilience and co-author of an important new book, Shadows of Doubt, Stereotypes, Crime, and the Pursuit of Justice. We'll now jump into conversation on a variety of issues based on questions that were pre-submitted by many of you, mainly focused on the US, but also on the global economy, and we'll reserve time for questions, additional questions at the end. Okay, so to set the landscape, this morning's news included the jarring, if predictable, report that the economy has shrunk significantly by almost 5% between January and the end of March, and with the expectation that the worst is yet to come as the effects of widespread layoffs and business shutdowns are accounted for in economic indicators. Last week's labor report counted 26 million people unemployed, with that number also expected to grow. At the same time, we've had very large-scale intervention by the federal government, almost unknown in our experience, nearly $3 trillion for individuals, for small, medium, and large businesses, for hospitals, and for other sectors of the economy. And we've also seen serious challenges with the delivery of those funds to some of their intended recipients, and serious concerns about funds not being available to some of the most vulnerable individuals, and also to businesses, small businesses without the required banking relationships. We also, on the labor market side, see significant disparities between who is working and not working right now, and who is working from home and who is working out in the non-remote workforce, as we might call it. More specifically, African American and Latinx individuals constitute much of the essential workforce, a disproportionate amount, which also has clear parallels to the racial and ethnic disparities that we see in COVID-19 rates of infection and also in rates of death as they have been reported. Women also constitute a large percentage of the essential workforce and disproportionately face challenges because of school closures and the lack of childcare. So to move into our conversation, let's start with this morning's news and then work our way back to the big picture. We'll talk about the federal funding initiatives, try to put those in perspective. We'll hear about the ambitious roadmap that Rajiv Sethi has been part of for pandemic resilience, the nuts and bolts of what recovery might look like, and what steps we might take to come out of this with a stronger and more equitable economy. And at the very end of the conversation, I will hand each speaker a magic wand so that we can learn about what their preferred policy announcement would be if they had that in hand for a moment. So let's start with this morning's news. And I've asked each of our speakers, Glenn, I'll start with you, to just give us your top takeaways from this announcement about the shrinking of the economy and the prediction that it's going to get even worse. Glenn, over to you.
Well, thank you, and thanks everybody for joining. I think the news was clearly bad this morning on GDP, but to what you said before, Suzanne, it's going to get much worse. Forecasters vary, but you should think of second quarter GDP as being more like minus 25% to minus 35%. Minus 5% seems almost small and quaint by comparison. So why aren't people even more exercised? Well, it's partly because policy has kicked into place. And I think the Fed's actions today showed that the Federal Reserve remains very committed to being vigorous in fighting the COVID-19 pandemic's economic effects. I think of this as kind of a Nike swoosh recession. And what the Fed is trying to do, what the government's trying to do, is take the slope of that check mark up as much as they can and to do all that they can. That's a lesson learned from the last crisis.
Thank you. You've given us a lot to think about. This swoosh certainly, I guess we'll have to think about whether the swoosh is really what level of slope the swoosh has.
Well, I say swoosh because, oftentimes when people talk about recessions, they use other letters of the alphabet. So a V people see a lot, and that just means a sharp downturn followed by an immediate sharp upturn. That seems unlikely. A U, a period of resting at the bottom and then going back up, or W or L or other letters. The swoosh seems about right to me, particularly because we don't know the slope. And that's one of the key things here. Anybody who tells you he or she knows exactly how this recovery is going to take place is either going to be a billionaire or probably wrong.
So Katharina, we won't ask you yet to tell us exactly how this recovery is going to take place, but would appreciate your reactions to this morning's news.
I think they were not surprising, but of course, looking at the numbers and seeing them black and white is always a different thing. And so it's basically sobering. I agree with Glenn Hubbard that it's probably going to get a lot worse because remember, the first quarter is when we still were mostly working, right? We started to shut down only in mid-March or so. So we have to expect much worse. And I think it's an unprecedented scenario that we are witnessing, that we're closing down an entire economy and actually much of the global economy, and that will take some time to stitch together or to reconstitute in some ways that an economy of some vibrancy will come back on its feet.
And one of the kinds of comments that I've heard is that unlike other experiences of recession or even depression where there was a gradual move into the really challenging economic circumstances, this one is sort of a sudden stop. Right, which is another dimension of what makes this unprecedented. Rajiv, what are your top takeaways on this morning's news?
As Glenn and Katharina have said, it was not a surprising number. A few days ago, the Congressional Budget Office gave forecasts for every quarter of this year and into next year. And they predicted a first quarter decline of 3.5%. So this is a bit worse than that, maybe more than a bit worse than that. But their own forecast for the second quarter was a 40% decline, which is catastrophic. It's much worse. And it's exactly as you said, it's like falling off a cliff. And the worst unemployment forecast is for the third quarter. They were predicting 16% unemployment for the third quarter, double-digit unemployment going through to into next year and to the end of next year. So I think it's not terribly out of line, but I think we need to brace ourselves because the second quarter is going to be really, really terrible, and the third not much better.
Thank you so much. It's all quite sobering, and you know what it means to brace ourselves for a situation that we can't even fully imagine is a challenging thing. I do want to remind everybody who's with us that we are going to hear a lot about steps toward recovery, so that it is not all hopeless. And actually, there are important steps that have already been and will continue to be put in place. So let's turn with that backdrop to the nearly $3 trillion of federal interventions so far. And I think more of that is likely to come fairly soon. And Glenn, I wonder if you could address two things. One, you sometimes say this isn't stimulus, and I know it's often reported as stimulus, so if you could say a word or two about that. And then also what it means for those of us who are lay people to think about this enormous amount of debt that the federal government seems to be taking on. And Katharina, I'll turn to you with a similar question right afterwards.
Well, it's a great question. Unlike the financial crisis in 2008 and 2009, where problems started in the financial sector and then bled over to the real economy, all the rest of us, this was just the opposite. The problems in the real economy, we had a pandemic, and the government decided for good health policy reasons to effectively shut down the economy. An economic shutdown is not like a typical recession. So the whole notion of things like stimulus don't make sense. After all, we're all staying at home watching Zoom all day. There's not a lot to stimulate. But we are trying to simulate a recovery in the economy, meaning people staying attached to work, keeping small businesses and mid-sized and large businesses from failing, and keeping people attached to work. So that is a way of saying, what was policy trying to do here? What were we spending money on? In a typical recession, we would focus principally just on unemployment insurance to catch people who lost their jobs through layoffs, and perhaps rebates to households. We're doing both of those now. But importantly, a lot of the spending is directly to businesses to keep workers attached to those businesses, be they large businesses, mid-sized businesses, or small businesses. That's very different, and it's been done in interesting ways. We'll see how successful it is. The size of the stimulus is truly massive in that regard. What we haven't really done yet is completely address the small business sector, partly because of implementation issues in programs we have, but partly because we really haven't put enough firepower there. We're also not doing enough for states. The US, of course, is a federal system. Much of what we call government happens at state levels and local levels and county levels. And we need aid to states, not just for public health infrastructure, but also to support them through this period. It's a large amount of debt. You know, $3 trillion is a lot of money. And how should we think about that? The easiest way I have for thinking about it is to imagine a war. In World War II, we borrowed an enormous amount of money. The debt to GDP ratio for the United States exceeded 100% at the end of the Second World War, and rapidly fell thereafter as we stopped fighting the Second World War and the economy grew. Big one-time borrowing is not in and of itself a crisis, especially when the alternative here, as we're all talking about, was an economic freefall. The US has big fiscal problems, as do many industrial democracies, but they were there pre-COVID-19, and the seeds of their solution lies pre-COVID-19. So while this is a lot of money, I don't think we ought to say we shouldn't borrow, we shouldn't fight it. We should do everything it takes to stop this. But then, yes, there will be a reckoning.
Yeah, and one of the interesting questions is when we think back to what happened in the 2008 recession, was there was tremendous stimulus and savings of parts of the economy that arguably needed saving, banks and most significantly. And one of the things we've seen in this situation is that our healthcare network and framework and system as it is, might need similar savings, but it is not as profit-oriented as banks. So we may come back to the question about what it looks like. But let me to your point, Katharina, for
Well, actually, if I could just jump in there quickly, because your point is really important. We did learn two big things since '08. One, policy acted quickly this time. There was dithering in the government and the central bank last time. There's not this time. You may like it or not like it, but they moved quickly. The other is a lesson about political economy. Last time we bailed out banks, or colloquially, we bailed out Wall Street, but did very little for average people. That's not lost on our political leaders who stepped up very massively for small business and others this time. Whether it's good enough remains to be seen, but those are two lessons that got absorbed.
Yeah. Thank you very much. Katharina, let me turn it to you. Different, for your perspective on any of these questions, and also you bring a global perspective to this, and we know that different countries around the world are taking different kinds of steps and structuring their relief in different ways to try to get their economy going, or at least to bridge it from where we are now to where we hope to be in the future.
Let me just come back to the issue of too much debt for the US government. I just want to make the basic point that the US government, if there is a government in the world that can afford to take on debt, it's certainly the US government. The balance sheet of a sovereign state like the United States is really different from a small business or a family. The beauty of the US is basically that it can issue the dollar, it can print its own money, and that luxury others typically don't have, and not even all sovereign states have. So I think the United States is in an extraordinary position to take on additional debt, as also investors are happy to lend to the US. You can still see this reflected in the interest rate, much more so than to many other countries. So for a global perspective, this means two things. Not all sovereign states have the luxury that the United States has. States that have given up their own currencies don't have the luxury, or that issue their debt in sovereign currencies or under in foreign law or under foreign.
Well, by sovereign, can you say what you mean by sovereign, so everybody knows?
Sovereign debt is if countries issue debt, right? So that's a sovereign debt, and if they issue their debt not under their own law or in their own currency, but in foreign currencies, they have to pay back in a different currency that they can't control, which means they can't print the money that they need to pay it back. Many countries are in that position, and they can't easily do the kind of measures that the United States has been able to put in place here. So that puts the US, I think, in a very unique position, and it should exploit that because it can really do something for the economy. I agree with Glenn that a lot more would have to be done here for small businesses. And one of the issues I think that we've seen in the United States that was somewhat problematic is that the channel through which the small businesses reach their money was through banks, and not all have access to banks. Other countries have used state administrations or development banks, if they had, to reach out to private businesses to make sure that they can access government funding as soon as possible, as quickly as possible, with too much intermediation. So I think countries have to use the infrastructure that they have, but it also tells you that we might not have the optimal channels in place to reach quickly to households and small businesses in this country.
Thank you. And as you're speaking, part of what I'm thinking about is the point you're making is there's an analog on the economic side to the public health side, where different countries are taking different approaches and have different resources to tackle the challenge of the pandemic. So let me then turn to Rajiv and ask you this question, right? You are the co-author or a co-author of one of the major recovery plans that has bipartisan support, a roadmap to pandemic resilience. And I do encourage everyone who's watching to read the report in full. There's also a great video on the website where you can find the report if you prefer that version. But for now, Rajiv, if I could just ask you to give us the 2-minute version of what is a very long and thoughtful report so that our viewers have some sense of what you're proposing here.
Yeah, I'd be happy to do that, Suzanne. Thank you. First of all, I'm a small member of a large team, and it's led by Danielle Allen of the Suffer Center at Harvard. And so I just want to mention that it's a collaborative effort, and it is bipartisan, and it is interdisciplinary. One way to think about what the report does is to go back to Glenn's point about this being very different from the financial crisis, and very different, in fact, from any previous recession that we've had in this country. But I'd like to emphasize a different aspect of this. Rather than thinking of it coming from the financial sector versus the real sector, the Great Depression and the financial crisis were generated by the internal functioning of the economy. They came from within the economy, and standard economic policies like stimulus spending, interest rate policies, and so on were appropriate to the task of managing them. This one has come from outside. It's an external event. It's a threat from outside of the economy, and we are not going to manage it. Whether we get a Nike swoosh recession or a W-shaped or U-shaped depends very much on how we deal with the source of the problem, which is the virus itself. So to get to the roadmap, what we are proposing is to deal with the external threat first and foremost. And the way we describe our strategy is with the acronym TTSI. So TTSI stands for testing, tracing, and supported isolation. And the key recommendation is that we ramp up testing to 5 million tests a day by June, 20 million by July, with the goal of partitioning the population into those who can be identified to be at least temporarily safe, who can return to work, and who can trust in the fact that their co-workers are also tested and that the people that they're interacting with out and about are also safe. They trust in the fact that they're not receiving infection, and they trust in the fact that they're not spreading the virus either. Whereas those who are test positive need to be isolated and to have their contacts traced so that they can also be tested. And this isolation has to be supported. And it has to be supported so that people don't have an incentive to break quarantine. So people must have confidence that they are not going to be separated from their job if they are isolated. And they have to have the financial support so that they can make it through the quarantine period. So these components, testing, tracing, and supported isolation, are keys to the plan. I'm an economist, but frankly, I think that this crisis, the most important steps that are needed to deal with this crisis lie outside of economic policy. I think that the Fed actions are very aggressive and very important. So are congressional actions with regard to stimulus, but they're not going to be enough. I think that they have to be supplemented. In fact, they have to be dominated by a concern with suppressing the virus itself.
Thank you very much for that explanation. And we'll come back in a few minutes to the question of where will the money come from for all of the supplies and the person power needed for the approach that you've taken. And again, I do want to encourage everybody to read the roadmap and to watch that video, which will give you some expanded version of the information you've just shared. And of course, as the roadmap lays out, you do pay quite a lot of attention to the civil liberties and civil rights concerns associated with contact tracing. Glenn, let me go back to you on this question. As we see different states take different approaches to reopening, right? Some states that are quite open right now and other states that are much less so. I think all of us are asking ourselves, what's the big deal with sort of starting the economy and then stopping the economy? And I know you've spoken about that. That actually is a big deal and not a great thing to do. So can you share share some of your thoughts on that?
Thanks. Yes, it's a very big deal. And going back to what Rajiv was saying, essentially what we do in economic policy is really derivative of an important health policy objective to stamp out the virus. Obviously, there's benefit cost analysis of exactly how to do that. And different states may have different strategies reasonably. They may have different population densities, different age mixes, different vulnerabilities. So it's not the case that there's a one size fits all or that you should necessarily be critical of one state for doing something different than another. Having said that, every state needs to follow a roadmap informed by health professionals, and states need to coordinate in a region. One of the great benefits of our society, of course, is that we're very mobile and we're very fluid within and across regions. So I think where we've seen out west and some of the northeastern governors coming together to talk about reopening plans strikes me as very useful. If we were to start and then restop, if you think this stoppage was problematic, that could be catastrophic. A lot of businesses that held on thinking the light was at the end of the tunnel might simply fold, and with them the employment relationship. So we have a lot at stake here, both in health policy and economic policy, and we shouldn't overly encourage people to get over their skis and do this too fast. We need to follow a reasonable roadmap, but be tolerant for the fact that different states and localities may do it at different paces for the right reason.
Yeah, and thank you for that. Some of what I've been reading, and again, I'm a legal academic, not an economist, but I've been reading quite a lot in the area of consumer confidence, and that there's a serious concern that if there's a reopening, without the sorts of sense of safety that Rajiv, you were talking about, people won't stay out. And even what we're seeing, and Katharina, maybe you can comment a little bit on this, is that in other countries where there has been reopening after a first wave and some significant resolution, whether China or elsewhere, we're still not seeing consumer demand pop right back, right? There, some people will talk about the economy as though it's going to come roaring back, and that doesn't seem to be what we're seeing. Katharina, can you say something about that at the global scale?
Yeah, first of all, I mean, a country like South Korea never had an official lockdown, but even in that country, we saw a major, major drop in demand because people are just nervous. They don't go out, they don't go shopping, they're not spending as much as they used to. They might not be going to work because they're fearful. So I think what Rajiv said earlier, the testing is a huge issue. We really are, of course, behind the curve in this country. We started testing much too late, and many states are still not fully equipped to roll out the kind of testing that we need to at least even test whether somebody is COVID positive. The next thing is then the question is whether we have antibodies, and we learn from new studies that this is not all good yet. There are many private tests that are coming out, but not all of them are doing what needs to be done. And if there are too many wrongful tests, then we are probably going to be in big trouble. But I think in general, what we're seeing is that, of course, people adjust their behavior to their surroundings, and they must have trust in their governments and trust in the tests in order to be able to go back to work. Without that, I don't think we have a chance to really emerge from this halfway intact. And I do agree with Glenn, like a second dip would be kind of catastrophic. We need the level of coordination amongst governors in the states in this country, but ideally also amongst governments around the world that is so difficult to come by these days. It's sort of the nationalist backlash that we've seen over the last couple of years in several countries have made it much more difficult to come together at a global level, because this is a global pandemic and we all are interdependent through our global financial system, the global trade system, and through travel. And the travels brings the virus to different parts of the world. So we need much more coordination, I think.
As you're speaking, part of what I'm also thinking about is that, just like I think most lay people did not use the phrase social distancing before a couple of months ago, I think a lot of lay people, and I include myself in this group, didn't talk about supply chain disruption, right? It wasn't top of mind, but now, of course, it's a central question that we're all asking ourselves. So Rajiv, let me just go to you for just, this is impossible to respond to in 30 seconds, but I'm going to ask you to do that anyway. The roadmap to pandemic resilience anticipates more testing than, certainly exponentially more testing than we've done. At the same time, many people have complimented the roadmap as highly sensible because it does restore both worker and consumer confidence about going back out into the marketplace. But who pays, right? Where does the money come from? That's the 30-second question for you.
So, Suzanne, I mentioned before a Congressional Budget Office report about the economy, forecast of the economy, and their projection is that we're going to lose $2.5 trillion of output in the second quarter. We have tried to put a number on the cost of the testing, and our projection is about $300 billion over 2 years. The amount that we're losing every single month right now in lost output is greater than the cost of setting up, and following the TTSI protocol. And so I would say that it's the question is, where does the money come from if we don't adopt that strategy? Where does the money come from if we don't ramp up our threshold levels of testing to the point that can avoid waves of infection, especially in the fall and the winter time? That's really the more costly policy, not just for the economy, but also more costly with respect to human life.
So underscoring the point that this is an investment in the economy to pay for the testing. So I'm going to ask the three of you as we move into this next part of the discussion, also to try to weave in a response to the question, what does it mean to think about states and local governments going bankrupt? Because that is, an issue that's been tossed around. We know that it's been said by Mitch McConnell that maybe that's not such a bad thing. Again, my sense as a layperson is, and from what I've read, is that actually is a pretty bad thing. Maybe you all disagree with that. But actually, if you don't mind, Katharina and Glenn, if you could each offer 30 seconds of thoughts on state and local government bankruptcy, and then we'll shift to the component parts of recovery and what that will look like.
Well, this isn't the time, obviously, to be having state and local governments go bankrupt. I'm a non-lawyer on the panel, but I don't even think it's possible by the conventional meaning of the word bankrupt. But I think the real issue is there's two fiscal challenges. One at the state level is getting states the money to fight the pandemic. That's public health infrastructure. That's the Medicaid program, which is a program in the United States largely for low-income Americans. The National Governors Association recommends a $500 billion block grant, which makes sense to me. That would be increasing the Medicaid matching rate, public health funds, and so on. The other fiscal issue for states has nothing to do with COVID-19. It's about pensions. And some states are worse than others. I'm sure that rankles the majority leader of the United States Senate. It might well rankle many people. It rankles me. But it has nothing to do with this crisis. And this crisis shouldn't be the occasion for addressing that. There are other ways of addressing that. But to my mind, throwing people into bankruptcy or states into bankruptcy wouldn't be a good idea any more than throwing millions of businesses.
And Katharina, let me turn to you with the same question and then also broaden it a bit, which is as you think globally about this and the risk of governments not going bankrupt, as it were, but in a metaphorical sense, sort of running out of money and resources in the same ways that you were just talking about earlier, and what that means not only for the ability to address the pandemic, but also for the supply chains that are such a part of our economic interdependence.
Yeah, I mean, on the state issue in major crisis, the state is the last man standing, in part for the reasons that I said before. At least sovereign states can issue their own currencies, but they also are responsible for some of the things that we all rely on. We need public safety, we need a police force, we need infrastructure, we need utilities, we need governance, and we need this at the local, at the state, at the federal level, and we need it globally. At the global level, as many of you must have heard, many countries have asked the International Monetary Fund for assistance because they are in trouble, and the International Monetary Fund hardly has the resources to deal with the requests. Many countries are in trouble. They have a lot of debt that they can't easily pay back. They need additional resources. A few countries can do, as I said before, what the United States has done in this country to respond to the crisis. So many countries are in dire state right now, and there are many efforts that where people think about how to deal with that, from giving additional credit, but also thinking about debt relief in order to set the stage so that they can take care of their people first before they have to pay back the interest and maybe even the principal on outstanding loans. How does it affect the supply chain? I mean, the point is that the supply chain, international trade chains have actually broken down. We don't have a lot of airplanes flying anymore. We don't have the kind of global trade that so many people have depended on. Many companies around the world have stopped orders. They have stopped deliveries, and workers in Bangladesh and elsewhere had basically had to go home to find some kind of social insurance in their families if they can't get it from the States. And so that's where the states have to come in and protect their workers who are unemployed because of the pandemic and don't have the resources to do so. So this is very deeply interconnected, but I really would say we know that in these kind of conditions, private entities, they are under what we call a binding survival constraint. In principle, if they have too much liability relative to the assets they have to exit the market. The states don't have quite as stringent a survival constraint. They have to step in because they have to stabilize and have to put people back on their feet.
And part of what I take away from what both of you have said is we can't function without the states, right? And we can't function without functional states, whether they're state or local governments, or foreign governments. And so as we think about next steps in this effort, this is central to what we're thinking about. So let me shift gears now and ask you all, and I'll ask you sequentially to think about different aspects of what economic recovery looks like. I want to start with a baseline. I heard the phrase the other day, virus economics, the idea being that it's similar to something you said, Glenn, right? And maybe Rajiv too. This all of you actually. This started with a virus, right? This didn't start with an issue that was internal to the economy. It started with an exogenous shock, an outside shock, the virus. And so until the virus is dealt with in a way that we aren't in a pandemic situation, it's impossible to know when this will end and what it will all look like. And I know a number of people who submitted questions asking exactly that. We're coming from the same place that I think I do and all of us do. What will happen? But knowing that we can't know for sure, that we're in a world of not only known unknowns, but unknown unknowns, I am going to proceed to ask you each about what recovery might look like, or what the economy might look like on the other side, or at least further along when we start to reopen and recover. So Rajiv, let me turn to you briefly for a comment on the labor market. What do you imagine that will look like as we move into a space of recovery?
Well, one thing about the labor market that's become very clear to people, I think, is just how dependent we are on the essential workforce. And right now, that's about 40% of the population, and they are working right now. And in parts of the essential workforce, like doctors and nurses and first responders, they have a fair amount of respect in society. They are esteemed quite generally. But there are others which, I think people have previously taken for granted. Think about sanitation workers, for instance, or people in the food processing, farm workers, grocery store clerks, and so on. I mean, just imagine the public health disaster we would be facing if our garbage was strewn across the streets. If we didn't have, regular pickup of trash in New York City, it's unimaginable. The situation is bad, but it could be infinitely worse without some of these people being out and about in the workforce. One possibility is that realization will allow for changes in institutions that make this work a bit more respected and a bit more rewarded. But at the same time, this is something that Adam Smith pointed out 250 years ago with what's come to be called the water diamond paradox, is that we can't survive without water, but diamonds cost a lot more to buy. They cost a lot more to mine and then cut and polish and so on. And that's how the market works. And the market alone, I don't think, is going to reward what we are calling essential workers. There would have to be changes in institutions and changes in laws if the status of individuals whom we are now very appreciative of is going to change. And lastly, I will just say this, that there have been major changes in societies that are forged and implemented in the throes of disaster. So the Social Security Act in the United States, I believe it was 1935 in the depths of the Great Depression. The National Health Service Act in the United Kingdom was 1946, after the Second World War. We don't know exactly what's going to come, but it seems as if we're not going to be untouched by this crisis, and we'll come back to a different economy for sure. Patterns of expenditure will be different, but I think we'll also come back to a different society.
And we'll come back to that question because it's so important, right? We're not passive actors here. And so then that maybe is where the magic wand comes in toward the end of our conversation. So what are the steps that we might take both short and longer term to achieve that different society? So let's turn to another component part of the economy. And Glenn, I'll turn to you on this to talk about business, right? Small, medium, large. What are the areas of growth? What are the areas of decline? We're also receiving some questions from our viewers about this. What parts of the economy do you expect to expand and what parts do you expect to contract?
Well, it's a great question. And I think, part of this, as we talked about before, is about macroeconomic policy. Do we get the recovery right?
What is macroeconomic policy? Can you just remind
me? In other words, use of the tax system or the federal budget or monetary policy, the tools of Washington, if you will, all the $3 trillion of spending, the Fed's actions. But to me, equally, if not more interesting, are what does business look like from market forces? And let me describe some benign things and then maybe some less benign. So some benign things might be that we change our tastes. So it might be that before we enjoyed concerts and big crowded football games and crowded bars and restaurants, perhaps the public changes taste. Business adapts to what the public wants to buy. And there may be very large changes in the hospitality industry, in the travel industry, not because we turn the economy on or off, but we as consumers say that's what we now want, and business will do that. That's benign, but it's wrenching. It's going to be a big hit on the hospitality and travel sectors, probably much more positive for technology firms, for healthcare, and in general, the online sector. The perhaps less benign aspect of this is the structure of industry. One of the reasons I've been very keen as an economist to focus on small business is it's a very important part of our economy. And I worry that if we raise the costs too much of compliance with a new healthcare regime and so on, that we lead to more bigness, that we get very large businesses replacing small businesses. This could be through mergers and acquisitions, which can be good, but need not be, or through the substitution of large chains for individual establishments, which again can be good, but need not be good. The observation I would give to you is the stock market. So if you look at the stock market, while it's down relative to where it was in February, it does not look like the real economy. It's much healthier than the real economy. And I think that reflects both central bank action, but also bigness, that there are a lot of firms that are actually winning from this and are going to make a lot of profits, even though the overall real economy may be less healthy.
So I'll come back to you in a few minutes about this question of how could the stock market possibly be going up when the economy seems to be in shambles. It's a question that some of our viewers have asked. It's a question that I sometimes wonder about. But first, Katharina, let me go to you to add more from your perspective. You've just written an important book about how law is embedded with capital, and you can describe it better than I can. Of course, it's your book. But what is as you look at recovery and what will change, either in labor or in business, what are your big takeaways nationally and globally?
Yeah, no, I think I agree with the fact, of course, that the crisis that we're currently in is different from the previous one in 2008, and that we had a pandemic caused by a virus. But I would like to point out that many businesses in this country, including large corporations, did not have much resilience to deal with any kind of shock because we had huge amounts of debt accumulated in these firms. So we have particular structure in the economy that makes an economy vulnerable to shocks. And I think something that we may have to learn in the future is to build more resilience. We did this for the banks after the 2008 crisis. I think we have to think about this much more systematically from the top to the bottom for a number of reasons. First, the pandemic might not be over. It might be coming back, and we have to make sure that people have enough of a buffer to deal with the fact that they might be out of work for a month, and that we have insurance in place to help those who cannot do this on their own, etc. But we, of course, are also facing climate change. Whether you believe that it's human-made or not, what we are seeing are changes in weather patterns that have effects on how the economy functions. And the volatility that is increasing forces all of us to think about much harder about how we want to structure economies. Let me make the final point about my book, which basically says that our economy is organized through legal commitments, credible legal commitments that we make. But that also means that the commitments that we've made in the past are still with us when the world changes around us. It's not that easy to get out of the contractual commitments, your mortgage payments, your rental payments, even as you lose your job. So you're accumulating liabilities without getting the cash flow to deal with that. And if the economy will grow a lot slower than in the past, and if we have maybe a W or whatever the form of the recovery will be, many people will not make it, and we will see firms continuing to fall and people get unemployed even as we think we're coming out of the recovery, because it's too hard for them to deal with the accumulated debt that they already have. And so the coding of the law tells you something about the commitments people have, and these commitments can be binding, and they have to somehow deal with that on an ongoing basis, even if they face hardship on the other end.
What is so striking about this is that when people make binding commitments, right, there's an expectation, not that the world will not change at all, but that the world will go on more or less in a predictable way with predictable ups and predictable downs. And we're now in the middle of the unpredictable, and we are in that place for the foreseeable future. So you raise I think what is a fundamental question about what does it mean to have binding commitments that stay with us into what everybody agrees is likely to be something of a new world. And you also spoke about the question of a second wave and how we might think about that. So Rajiv, let me turn back to you and ask, what, as an economist and as somebody who's been involved in both the roadmap to pandemic resilience, but also as someone who's thinking about these issues more generally, what are your thoughts on how we protect the economy in anticipation of a possible second wave? And even if there's not a second wave of this virus, one of the things that we hear from all of our public health colleagues is that as a result of climate change and other factors, there is a great likelihood that we are going to continue to see other pandemics or epidemics that have similar or at least some kinds of devastating effects on the way we live. So Rajiv, let me turn it over to you to address that briefly.
Suzanne, I think we have to do everything humanly possible to avoid that second wave. And really, that's really what's motivating us. And we believe that we're at a crossroads right now where decisions made, right now, including this week, are going to have repercussions for years to come. And so, the possibility of a second wave is just too awful to imagine and simply accept, I would say. We really, really have to try to, engage in the level of testing, tracing, and isolation that would avoid that second wave. I'm sorry, I lost the latter part of your question.
Which is, what else can we do as we think about protecting our economy from future smaller shocks?
Yes, so with regard to climate change,
but they may be out there.
Yeah, you're right. So this is not the last crisis we're going to face, and it's not even the last externally driven crisis, and they may come with greater frequency even, some would say. And climate is a big one. I would say that we can, try to find a way to modify our institutions while protecting privacy, protecting civil liberties in such a way that we give scientific expertise a little bit more of a chance to persuade the public and to do something about the dissemination of falsehoods. I don't know. This is a very, very tough nut to crack. How do we do it? I mean, we live in a free society and we value our freedoms, and the First Amendment, gives us rights to say all kinds of nonsense. But, we really need our scientists to be heard. And I don't know what the answer to that is. That's really, really a tough one. We have to find a way to make sure that we maintain our liberties, but at the same time, where truth and falsehood don't spread with quite the same ease as each other, that the truth wins out, at least more often than it has in the recent past.
One of the things, picking up on what you just said, that public health experts say over and over is the most important thing that any of us can do in a pandemic is to educate ourselves and educate others, and to find reliable sources of information. And it's interesting to me that what you're pointing to are not solutions so much about economic policy, but about social policy, about education, about the relationship between government and science. And I'm sure some of you have followed the reports around the world of the way different press conferences go and who's taking the lead. Is it the scientists? Is it the elected officials? Is it a bit of both? Each state, each local government, and each country has its own mix of that. And I think you're right that will be critical as we think about these issues going forward. So Glenn, let me come back to you. We've had a number of questions, and I'm going to bundle, well, it's not an obvious bundle, but let me bundle some for you. The markets, right? How does the stock market go up after terrible news about the economy? What are other kinds of investment markets likely to look like? People are wondering about gold. What about real estate? What about housing? And then I'm going to tack on the what about higher education, which is of course not a market in remotely the same way, but if you can say a word or two at the end of your comment on markets about higher ed.
Sure. If I could, though, right at the beginning of this, pick up on something Rajiv was saying about science, because I think there is something important that those of us who aren't scientists can help with, which is communication skills. So, for example, just the point Rajiv made earlier that, is it cheap or expensive to spend $300 billion on testing? Well, it depends on your counterfactual. Michael Greenstone at the University of Chicago has a map of the country on how different regions' temperatures and job losses would be affected by climate change. So I think there are ways we can map science into what average people can understand. On your questions, the markets, I think the U.S. equity markets are ahead largely for the reasons that I suggested. The Fed can do a much better job reflating asset prices.
Can you say something when you're talking about the Fed? Just give us the 10 seconds.
Yeah, so the Fed, again, the U.S. central bank, can use its balance sheet to acquire assets in the, call it Fed 1.0, that would be buying U.S. Treasury securities. Fed 2.0 has the Fed into perhaps mortgage-backed securities or other things that have a government or quasi-government guarantee. Now the Fed is buying a whole lot of assets that really aren't government guaranteed. That is, it is taking some credit risk, which would be unusual for a central bank. That kind of intervention can raise asset prices. And it could also have a salutary effect on the economy, but its effect on asset prices will be felt much more quickly. And I think the stock market is picking it up. Also, as I suggested earlier, U.S. public equities are not a random sample of American business. They are quite large firms, and indeed much of the positive equity returns that dominate, say, the S&P 500 or other big stock market indices that people might read in the daily papers are large tech companies and other companies that are really not representative of the economy as a whole. So don't think that a rising stock market means we're necessarily quickly out of this. Personal financial advice, I almost never give. My wife would say, never take advice from Glenn on individual investments. But I will say are some obvious things that perhaps people are less, think are less obvious. One is be resilient, to Katharina's point, as an individual. Always have a buffer of cash and liquid assets so that you can withstand something short term, and hold a diversified portfolio. Think about the risks that you face, whether you're a young person who is decades and decades ahead of you, or an older person perhaps in retirement. Your strategies may differ. But I think having more resilience as individuals, more resilience as companies, and more resilience in the public sector, while that will look different for each, ought to be a watchword leading this crisis.
So resilience seems to be the word of the day, both when we think about the economy and when we think about markets, which we're not going to be able to predict what exactly will happen in any given area, which is why I think, to your point, the idea of planning ahead, cushioning as you can, and if you are investing in markets of any sort, diversifying. Let me just shift gears quickly to higher ed.
Yes, the higher ed, I mean,
higher ed prospects for new graduates and people about to graduate, whether undergraduates or graduate school.
Well, I think that if you take the medium run view in your career, which is always the right thing when you're graduating from college or professional school or graduate school, when you graduate does matter. I can't sugarcoat that. We have a lot of evidence that your initial experiences are shaped by the world into which you step. That's obvious. But taking things that keep you on the ladder of the career you want are still the right advice. I know many graduates, say from Columbia Business School, who came out in tough times at various points, were very successful people. They may have had a more winding career than they thought at the beginning, but eventually they get there. I think the individuals for whom it's much tougher are people who aren't even necessarily attached to higher ed, particularly elite educational institutions like Columbia, where we don't do enough in society to prepare those people for training and for meaningful work. And that's not really a Columbia problem as much as a community college problem. Higher ed finances are going to be very interesting. You know, our nation isn't one higher ed system. There's a handful of institutions like Columbia that have multiple sources of funds, occupy research prestige, get funds from all over the world. Many private universities are not selected, that they will not make it. They will either be cutting back a lot or they simply may go out of business. State universities are essential, but will depend on funding, how much support they get from taxpayers and how much support they get from the federal government. So there will be no one size fits all, but I will say this, crises are time for innovation. You're going to see a lot more innovation, whether it's the way we teach, the way we organize ourselves, the layers and spans in universities, all that's going to change over the next decade.
Thank you. It's a lot to think about and take in, but what I'm going to take away mostly for our students who are in school now and are approaching graduation is that there's actually opportunity here, and there may be
Yes.
pathways that wouldn't have been predictable, but will ultimately turn out not only to be interesting, but to be places for major contributions to our future. So Katharina, let me ask you to do the impossible, which is, in just a minute, I know this is impossible, but do your best. How, we come into this crisis with a world in which inequality, substantial, right? Some would say sort of epic inequality defines much of our economy at the local, national, and global level. Do you have a thought about that you can share about how we might come out of this better?
Well, I think the first thing that will happen is that we will come out worse because, as Glenn suggested, the companies that are doing well on the stock market right now, they will have resources, their shareholders will win. I think the curve, the so-called elephant curve, where we can show sort of who is making more or getting more income relative to everybody else, the tip of the trunk of the elephant is probably going higher, even if everybody else is going lower. So I think inequality will increase. And we will have to think very hard about how to deal with that. My sense was that even prior to the crisis, the levels of inequality that we have had in major Western countries like the United States or the United Kingdom are politically unsustainable. So even if you think this is sort of owned wealth because you had high skills, I tend to think that it relies extensively on the legal structures that you can use to produce wealth in the first instance. But whatever the reasons are, I think sort of for our notion of being democratically self-governing societies, these amounts of inequality are highly problematic. And so we have to be very thoughtful in how to think about the redistribution of wealth, because we can't easily grow out of these kinds of levels of inequality. This will be taking far too long to converge. So we have to think about how to make sure that those at the periphery of our societies, the poor ones in the United States, but also globally, do get the sufficient support so that they can grow, and they can maybe even grow faster and get more help than those at the top.
Thank you so much. And I think that is a great bridge to our final question. And I'm truly going to call this a lightning round because we're very close to the end. So in under a minute, I will take the proverbial magic wand and hand it to you, Rajiv, for your comment on what would you do with the magic wand?
Oh, let me just quote Danielle Allen, who's led with a lot of inspiration and foresight this effort out of the Safra Center. And she says, to do what we need to do, we don't need to suspend the laws of physics, but we do need to suspend the laws of politics. And we do need everybody on the same page because the federal, state, and local governments have to work with each other to achieve this. And Glenn was absolutely right when he said earlier that different states ought to be pursuing different policies under different conditions. But we require coordination, and we require federal financing, and we really require federal help. And so, if I had a magic wand, maybe suspend temporarily the laws of politics.
Thank you. Glenn.
Well, that would be the magic wand I would suggest too. I think the way I would put it is, we need to, on a clear day, stand up the institutions and approaches we want to use in a crisis, whether that's the way we help the unemployed, the way we help businesses, the way we think about resilience of various sectors like public health, the way we may want to set up insurance. An analog to terrorism risk insurance might be the kind of insurance for business interruption here. So I think we just want to think with a clear day and put politics aside. That's a pretty tall order.
Okay, thank you. And now, Katharina, quick wander over to you.
Yeah, it's similar. One of my neighbors has a big sign out on her window which says, "We are all in this together." And I think sort of making sure that people understand this, that this is not for a world where we are a situation where we should try to get comparative advantage over others, but where we have to think about how to put our economies, our societies, both domestically and globally, back together. We have to have cooperation. And if I had a magic wand, I would make all of us cooperate.
I think I will take that as my magic wand also. And with that, I want to thank the three of you for really an extraordinary discussion. It's a gift to have all of you share your insights with us. And it's part of the gift of higher education that we have opportunities to think not only about the immediate, but also to think both historically and into the future about what we might expect to see. This video will be available on the University Life website at Columbia University. I want to encourage you to share it widely and look forward to seeing all of you at a next University Life Forum. Thank you so much.